Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Hey, thank you.
All right, so we just had a discussion on FedEx. I had an earnings, so we wanted you guys to hit on UPS. And, I'm looking at the performance so far this year. UPS is actually negative, severely underperforming the overall market. FedEx up over 60%. I'm not sure what your data says here, Andy, but what's screaming and blinking out to me is pairs trade on this one. What kind of data do you have on UPS?
Yeah, these two companies are very similar. I think, to kick things off, we need to recognize that both UPS and FedEx are very much susceptible to the same macro trends and same environmental factors, whether it's, overall consumer health, consumer demand, energy prices, all of those things impact both of these companies. So when we get down to comparing the two, for us at LikeFolio, it really comes down to kind of a razor thin edge. And, quite frankly, we see UPS starting to get its groove back, especially versus FedEx. We started to highlight this in October. UPS stock has recovered pretty nicely since then. We think that gap between UPS and FedEx stock price performance probably continues to close in 2024. And the reason is, we're really seeing a divergence in terms of web traffic between the two. Now, these are both small percentages, but UPS on the positive side, while FedEx is on the negative side, is certainly worth mentioning, especially in the holiday season on a year-over-year basis. We think, overall, we're just seeing a lot of indications that consumers are starting to, respect and prefer UPS's smaller but better philosophy in terms of how they're going to treat each customer package, the customer experience. Their acquisition of happy returns has been a big positive for the company, I think. And so they're putting themselves in a position to win with the consumer. And we think ultimately that trickles out to their B2B deals, because one of the things that really alarmed us when we looked at Chewy, the online pet store that delivers everything, their relationship with FedEx has really hurt their consumer happiness levels and the level of satisfaction that their customer is getting. And so when you start to see that type of indication pile up, you wonder if FedEx's recent lead over UPS might be short-term in nature, and UPS's focus on delighting their customers and the recipients of their partners' packages may be something that wins the day overall. So that's what we're looking at going into 2024.
Yeah, Andy, you're right over the target of kind of what I was going to ask about, which is historically from our conversations, I recall UPS pretty consistently having a consumer happiness lead over FedEx. But as you know, as we all know, a lot of times this choice isn't one that we get to make as a consumer. Yeah. The business makes these kind of contractual agreements with the shipper, and then you're stuck with what you get. And this is where the incentive structures may not be aligned. If you're a business, you may want to save a little bit of cash, and if FedEx can give you a better deal, you're probably going to go that way. But now what you're alluding to is how it can maybe have a negative impact on your business. Now, are these the kind of trends that take a long time to play out? But if you're Chewy and you're getting this kind of feedback, when this expiration on this deal comes up, maybe you now have a new incentive instead of just cost saving.
Yeah, I think you do. I think you're right. I think it does take some time to play out. And again, UPS and FedEx are probably going to trade, generally in tandem, on a day-to-day basis in terms of there's a lot of macro factors that impact both of these. But when we look at the consumer preference, it's clearly shifting towards UPS. And we think that trickles out over time. And like you said, it probably isn't something that a company like Chewy can change tomorrow, but when they go back to the negotiating table with FedEx, even if they end up staying with FedEx, they have, in our opinion, a significant amount of negative customer feedback and data to point to say, look, you're saving us money, but you're not saving us enough money to deal with this. And so we need to, you either need to cut your prices more, or we're going to look at competitors. And I think that's probably the route that a lot of companies are going. I think FedEx may have gotten a lot of deals, but the way that they're delivering on those may not make them, really long-term in nature.
Yeah, Andy, we're going to bring up a comparison chart between that gap between FedEx and UPS that we've seen as far as stock price goes here. UPS down 7% this year, FedEx up 62%. So you see it's as wide as it's going to get here at this point. But when you look at, I noticed that, there's underperformance in UPS, right? So if the whole business is doing well, maybe it gets lifted. They don't have earnings until the end of January. Going into this report, UPS will probably move on the FedEx news. But when you look at this, do you like FedEx here more from a data sentiment perspective as opposed to FedEx just due to the stock moves?
Yeah, the stock moves is a big deal. I think, FedEx has a much higher bar to get over on this earnings call than UPS will in the future. That's clear from the stock market performance lately. And we've seen that, in this quarter. I think the most important thing for an earnings result earnings reaction has been how high the bar the Wall Street has going into it, and I think FedEx's is pretty high. And so, if I were a betting man, if I were a trading man, I think I'm looking for an opportunity to pick up shares of UPS if FedEx doesn't reach that high bar and both of the stocks pull back. I think that could be a good long-term entry point for UPS.
Andy, yesterday we talked a little bit about, I believe it was Affirm, Shopify, kind of had the conversation about the consumer a little bit and kind of some of those underlying trends. Anything you're seeing in any data that leads us to start worrying about the consumer yet, or are these shippers still in good position in the next quarter or so to capitalize on a U.S. consumer that continues to spend U.S. dollars?
Yeah, I think the U.S. consumer continues to spend U.S. dollars will be something FedEx hits on. I don't think they have any reason to put any, real negative sentiment out there in this call. And, back to Affirm yesterday, I think today they came out with an announcement that they're partnering with Walmart to allow buy now, pay later at the register in stores. And so this isn't just something that's happening online. We're figuring out new ways for the consumer to buy things, and the consumer's eating it up across the board.
Yeah, definitely high bar, low bar theme that we've been talking about on the show is in play here. But, you expect UPS to probably move. But great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the UPS data. High bar, low bar, Alex, going into this. The problems for UPS were threefold, right? Rise in interest rates, consumer spending, correction from post